What's going on? About to get this thing going. Gonna give it just a couple more minutes before I really get going in this. Got a good one today on a topic that most traders probably just skip over or don't really care about. But yeah, you can see I'm going to go over risk management, risk to reward, probabilities, and trading with an edge. So just some stuff that not a lot of traders really talk about, and it's going to be hopefully some new stuff for you that you haven't really thought about maybe, or that you've never really seen before. So let's get into it. So the question of the day, I guess, is right here. And a lot of traders are kind of stumped on this one. So let's just review it real quick, because it's important that you understand this. And if you don't, that's okay. I'm looking at the poll right now, and we got 41 votes. 34% of them said trader A, 12% of them said trader B, and 54% of people said they made the same amount. So let's see what the right answer is. And it's clear whenever you kind of draw it out. People are just in their heads right now about it. It's a clear answer. And the answer in the poll, 54%, that's not the right answer. So let's talk about this. And then we'll segue into the training. Now, if you have trader A and trader B, let's draw them right here. So we have trader A, okay? We have A, and then we have a B. Okay, and they both have the same amount in their account. So they both have $1,000. So we can give them both 1,000. Okay, great. He's got 1,000 here. Let's clone that, and let's give him 1,000 here. Okay, perfect. They both see the same trade and have a target of 50 pips. They both decide to risk 2% on the trade. Okay, great. So let's see. Trader A has a stop loss of 10, and trader B has a stop loss of 25. Okay, so looks like trader A has a 10 to 50 risk to reward. So let's go ahead and put that here. We have a 10 pip stop for a 50 pip reward. Okay, beautiful, beautiful. Let's make it a 5-to-1, just about. Okay, boom. 10 pips for 50 pips. And then this one, we have the same trade. So they're taking it at the same spot. They're taking it to the same target. But this guy, he's risking 25 pips. Okay, he's putting 25 of his at his stop. Now they're both going in at 2%. So this is 2%. If he loses, and this is 2% if he loses. But what's the difference here is the green box on the left is going to give him way more. Check it out. Okay, here we go. 1, 2, 3, 4, 5 times what he's risking. This guy, not even close. He's only getting 2 times. So 1, 2. Okay, this dude is not going to make near as much as this guy. Okay, this guy makes 10% of his money on this trade if he doesn't take anything out. And this guy, let's move this box now. This guy only doubles his money, and that's cool, but that's how that works. And they definitely don't make the same amount of money. So if you have any questions about that, drop it in the chat. But that's exactly how that goes. They see the same trade, but this guy he's basically more risky, so he's going to make more. This guy, he's less risky, so he's going to make less. Straight up how it goes. So we're going to jump into a little bit more of this right now. Talking about risk management first. Because it's important to really understand the importance of risk more than getting so excited about making money. You really have to understand the risk part before you try to go ahead and make a whole lot of money, because if you don't fully understand how to protect your money, you're definitely going to lose it. Even if you make a whole lot of money, even if you do get a nice win, a great winning streak can happen to anyone. But if you don't know how to protect that money and risk it correctly, you're going to end up blowing your account. So I want to go into this. Now, most people say you only need to risk a maximum of 1 to 2% per trade. Okay, and that is correct. You don't want to risk more than that. And let me show you why. I have this right here. And this helps with understanding why you don't want to risk more than that. So every trader goes through losing streaks, and it kind of makes or breaks the trader. It really does. Not your winning streaks, your losing streaks will. And I don't want to hear that you don't go through losing streaks. It does happen. Now, there are very, very, maybe 1 in a million traders who don't go through losing streaks, but I can guarantee you they have gone through it at least once or twice. And usually it's more than 5 trades in a row, to be honest. Usually it's around 10 to 20, and it happens. But hear me, it's about the market conditions and all of that. But hear me out here. So I have written down, if you're losing 5 trades in a row and you're only risking 1%, that's only a 5% drawdown. Anyone should be able to handle that in their account, no matter what. And then pretty much the same thing. If you lose 5 in a row at 2%, that's a 10% drawdown. That's going to hurt, but you should definitely be able to come back from that. Not only like with your money, but mentally. It shouldn't hurt you too bad mentally. But then once you start to get into like the 5 trades in a row at 3%, 4%, and 5%, once you start to get down 25% in your account, that's trouble. And you don't really ever want to get to that point. it happens, of course, but at that point you really need to like completely reassess what you're doing if you're at like a total of 25% drawdown in your account ever. Now, I know this might be new to some people who are maybe trading with a $100 account. And you know, if you lose $25 there, you're down 25%. And that might sound kind of like, what is he talking about? But in the real world of trading, to make real money, we need a lot more than $100 worth of capital, right? So I'm talking about, you know, maybe 10,000 or at least $1,000 of capital here. And I'll show y'all why whenever I get into the risk calculator, the position calculator. So let me show y'all this chart as well that I have. This is going to show you why getting into these type of drawdowns is a lot more difficult to get out of than you actually think. Okay, so let me bring this chart up real quick. Now, I hope we can all see this here. This should be the percentage loss of trading capital on the left, and then percent gain to recover on the right. So this basically is showing on the left that if you lose 10% of your account, it takes 11.11% to recover that. It doesn't take 10% to recover it because you're at a loss now. Same thing here. If you lose 20% of your account, you don't need 20% to recover. You have to make more than what you lost to get back to break even. So it gets way worse when you start to lose a lot of your account. When you have that $500 account and now it's at $250, that's what this scenario would be at 50%. Now you have to literally make 100% of your money back just to get at break even. So that's another thing that I wasn't really ever taught. I actually learned this when I went to get my license for life insurance at one point in my life. They were showing me this for annuities, and I was like, whoa, that correlates with the market if I lose. So yeah, you definitely have to dig yourself out a lot more whenever you lose. So that's another thing to keep in mind. Now, I'm going to go back into the trading view now. And I'm going to get over here, minimize this stuff. Okay. Now, what I want to show y'all is the how to use the risk calculator now. Just so you know where, or I guess know what to put your lot size at. All right. So this website here, you just literally go to Google and type in or type in position size calculator, and it'll bring you to my FX book. And it's literally, you type in everything that you of your account. So account size, say you have $1,000 in your account. Okay. You want to risk 1 to 2%. You shouldn't want to go over that really. 1% right there. And say you have like let's say a 30 pip stop. You go to your phone and you open up the pair that you have on right here. So this says gold. You go open up your phone to the MT4 and you go to the details, and it will show you the contract size of your broker. Every broker is a little bit different, but it'll show you the contract size of your broker. You type that in and then you press calculate. Then it's going to show you the lot size that you need to use to remain within the risk that you're looking for. Okay, so you can go to any pair. Let's go to like UJ, and it automatically gave me the contract size. If I go check that on my MT4, it is correct. So a 1% on UJ, and I do believe that gold is a little bit different. That's why I changed it to UJ. You'll have to make sure your broker, all brokers are a little bit different with gold, but just make sure that you're not over leveraging on gold. Sometimes it'll give like, because I just noticed it did a 0.33 and now UJ is telling me 0.03. So just watch out, stuff like that. But yeah, gold is a little bit different, but UJ is telling me for a 1% trade with a 30 pip stop, I would lose $10 if I lost. So I need to do a 0.035. So basically a 0.03. You can do a 0.04 if you want. But that's how you do that. And that's basically how you never over leverage in the market. I know a lot of people have trouble with their lot sizes, not knowing what to do. Now, in order to do this, you have to have a setup in place. You have to know pretty much that you're gonna have a 30 pip stop loss. You can't just get into the market with a and then go measure your stop loss. It's kind of got to be a little premeditated, and that's what you should be doing anyway as a trader. So that's how you calculate your position size. It's very easy. Also, if you're not a percentage type of person, which you kind of should want to start leaning towards that, you can switch it to money and you can just say, okay, I want to lose 20 bucks. I'm okay with losing 20 bucks. And you can calculate that up and it'll give you what you need. And it even will tell you your risk up here, 2%. So if you are a rather type of money person, just make sure this risk isn't too high. And I'm going to show you all why you really don't want to risk too much than 2% also. Okay, so let's get into risk to reward. Now, I got a couple of charts that I want to show y'all on my Telegram that I've sent to a friend, but let me see here. Let me see, make sure I got it pulled up. All right. And let me check the chat as well. Let me pull up this Telegram and y'all should be able to see my Telegram now. Let's drop this over here. Okay. Let me check the chat. Yeah, I'll zoom into, or I'll make the letters bigger on my screen when I go over there. But okay, here we go. What I have here is pretty much a chart of what a 1 to 5 risk to reward setup looks like and what a winning percentage off this would look like and how much you would gain. Okay, and I have it 1 to 4, 1 to 3, 1 to 2, and 1 to 1. So let's look at the 1 to 1 first, because I know a lot of people trade a 1 to 1 setup. Now, this is kind of going back to that first question that I had about who would make more money. This is where you start to figure out how you're going to make more money. So with a 1 to 1 setup, if you are 50% accurate every time, 50% in trading is pretty good. You aren't even going to make any money. You're gonna lose half and you're gonna win half, or you're gonna win half and then you're gonna lose half. So you're gonna come out just at 0%. If you're 60% profitable, which is great, really, it is really great, you're only gonna make 2% after 10 whole trades. Okay, and then of course, as you scale down a little bit, if you're a 90% trader, which, shoot, you're amazing, you're only going to make 8% after 10 trades. So this 1 to 1, you'll see how the 2 to 1 looks a little bit better. Remember how this right here, 8% is like the maximum that you're going to make on a 1 to 1 setup after 10 trades. The maximum that you're going to make. Because this right here, I have it start out. You can't take any partial profits in any of these setups that I'm showing you. And we all know that everyone takes partial profits most of the time. So that means that this percentage gain right here is going to be even a little bit less than this if you take partial profits. So let's go into the 2 to 1 setup now. Remember, 50% of a 1 to 1, you're not making anything. Now, a 2-to-1 setup right here, boom. We're still risking 1% on every trade. So if you lose, you're going to lose the same no matter what. But if you win, now we have the setup to where we're going to profit as much, double is what we're risking. Now, these setups, if you're 50% accurate on these setups, you're coming out 5% on top. Okay, that right there alone should let you know to never trade a 1-to-1 setup ever again a day in your life, because it's just not worth it. You have to win so much more of those setups to be profitable. You only have to win, look, 60% of a 2-to-1 to be 8% profitable at the end of 10 trades. For a 1-to-1, you have to be 90% to get 8%. So right here, if you're 90% accurate trader on a 2-to-1 setup, you're making 17%. Now, most people, of course, claim they're around 70 to 80%, which I don't doubt it. You know, if you're waiting for good setups, you got an edge in the market, you could be a 70% trader, 80% trader. And that's 11 to 14% right there. That's money all day. But let's get into that 3% now. So, the 1 to 3 setup. All right. So now this is what I like to personally wait for on every single trade. I like to really not trade anything under this, and you can see why right here. I can be 30% accurate. I don't even have to, I can win only 3 out of 10 trades and I can still come out on top and make money. Most of the time you end up taking partial profits and you really end up breaking even, but still, I mean, you can end up having a shitty week and end up close to profit. And of course, if you have a 50-50 week, you can come out 10% profit. That's amazing. That's better than being a 90% 1-to-1 trader. So that is why I only trade a 1 to 3 risk to reward. I wait for 1 to 3s. If I have a spectacular week where I only lose like 1 or 2 trades, this is what I'm looking at for the week, a 22 to 26%. Okay, that's why I wait for these type of setups, and that's why everyone really should wait for these type of setups, because even if you have a bad week, even if you have 10 bad trade or 10 trades and only 3 of them go your way, you're still going to be fine. Your account isn't going to hurt. And this is all about managing your risk. This isn't about how much money you can make. This isn't a how to double your account in 2 days. This isn't that training. This is a strictly don't blow your account anymore. Stop losing 10% in one trade. Don't do any of that, because look, you're all good if you just wait for these setups right here. You're not going to ever lose your account. You will get to come back and trade every single day, every single week, until you master it. Now, once you start to really find your edge, find your setups, find what type of trades you really like, and you really start to get patient, you start to find 1 to 4s and 1 to 5s. So this right here is when you really become not unstoppable, right? But you can really lose trades. Like, you can really lose trades and still come out fine. I'm talking, you can go 50-50 and still make more money than most people are going to be making all week. If you wait for these setups. Now, a lot of time, here's the thing. Throughout 1 week, you might not get 10 setups that are this good looking. And that's okay. You might only get 5. But say you go 50% with 5 trades, you're still looking okay. You know what I'm saying? So it's still looking great. Now, if you're a 20 or a 90% trader like this, and I know a lot of people who claim that they are like 80% with these type of setups, 30% profits. That's really good, even if you're taking half off and shit. Excuse my language. Now let's go to that 5-to-1. Personally, the best setups I look for are really 6-to-1, but you know, a 5-to-1, I'm just going in this order that I had the charts made. I think I made this about a year ago or so, but a 5-to-1, right? You can, here's the cool thing about this chart, about these charts. The first setup we looked at was a 1-to-1. And if you're a 90% trader right here at a 1-to-1, you're going to make 8% max. Now we go to the 5-to-1. And if you're a 30% trader, you're making 8%. See the power in waiting in good, high probability risk to reward setups? That is the power right there. If you can just wait for good setups and not get greedy, basically, then you're going to pretty much be able to hold your money in your account longer, is what it comes down to. And once you start to get really good, right, then your money's going to multiply a lot quicker. But really, this chart is to focus on this right here, right? If you're only 30% accurate, you're still fine on these type of setups. So I hope that helped some people on that, on risk to reward, waiting on good setups. I'm gonna go back into the trading view now. And I can send those charts out on the Telegram as well. So y'all can have that, because I don't want to just hold it for y'all. Okay, now here's a cool little website that I found. I literally just typed in win percentage calculator, and this website came up. So if you want to try to find out your win percentage to see how you're doing, to see you know, really how you're coming out at the end of the week, just type in your wins. Say you got 15 wins and then you got 7 losses, you know, 68% win percentage, you know, it gives it to you right there. So that's how you can figure that out real easy and simple. Up here, go to Google and type in win percentage calculator. Then it'll give you that right there, real easy. Okay, let's see. I got a little bit of notes right here. Yep. What I want to get into now is probabilities. So that's kind of coming into percentages, probabilities. This right here is important. So so I need to make this a little bit bigger, and I hope that helps. But probabilities in trading, I'm just going to talk about this a little bit, because it's not talked about a whole lot. So if you have ever played poker, and hopefully some of y'all have, because you know you're trading, you're trying to make more money, and you're a little risky, you're a little gambly, right? This will make sense to you. So when you are dealt cards, right, you look at your cards and you make a bet based off of the cards that you have. It's kind of like looking at the chart and seeing a setup, right? So then you enter the market, you know, you make a bet, same thing. Well, then the flop comes out, right? And it's like ace, jack, queen, and you don't have any face cards. Well, the odds just changed a little bit, didn't they? Right? The odds just changed. Same thing in the market. If you are in a sell, okay, and the market drops a little bit and then it starts to pop up really hard, you know, the odds just changed a little bit. You might not want to look at selling the market anymore too much. You might want to look at getting out. Same thing, like if you are looking at maybe a longer term setup, and within that longer term setup, there's a lot of bullish action going on. That might change the whole probability of that long-term bearish bias because there's bullish action going on. That type of thinking needs to go into your analysis when you're risking. So some people, when they see a trade, they get super excited and they go, oh, I'm putting 5% on this. But they didn't really look to see all the probabilities that could come of it. So it's good to have a checklist for when to enter the trade, but it's also good to kind of have a checklist of how could this trade maybe fail, to help your probabilities in the market. Because I know for a fact you've seen a setup where it looks clean, but then like last second you see something, you're like, oh shit, but there's like a candle right here or like a zone right here. That is part of your probabilities that you need to put into the trade before you get into it, or even while you're in it. If you're in a trade and the probabilities change, the odds change, it's all good to go ahead and take half of that trade off right there, no matter what, because you're taking half the risk off right there. You're literally removing half of the loss that you were gonna take. And that's okay to do too. You know, it's not necessarily better to start thinking in ways to protect your money, but if you're in it for the long term and you're not trying to just flip your account because that's risky, then that's what you should start thinking about, ways to protect your money and how setups might fail or might look when they're gonna fail, to understand your odds and probabilities. And now that kind of goes into the one of the last topics that I have is having an edge in the market. And that's something that I read from a book called The Art and Science of Technical Analysis by, I think, Bill Grimes. I don't want to get that wrong, so it might not be that author, but he spoke about it. Linda Brashke has spoke about it, another one of the mentor traders that I follow. And what it really is having an edge in the market means to basically pinpoint a certain setup that you trade, a certain pattern that you trade, a certain very specific set of rules that you have found that works in the market. Now, for me, that is divergence with the MACD. Okay, I have pretty much mastered the divergence with the MACD. Also, it's the other two setups that I've started to implement too: the impulse and the little stop hunt. Those three setups are my edge. I wait for those only, and I only trade those setups. If some of y'all know one of my friend trader Jasmine, she has an edge in the market, and her edge is flag patterns. She waits for flag patterns only. And so having an edge gives you a statistical advantage that you won't have if you just continue to trade every like random setup that you see. Oh, break and retest. Oh, reversal. Oh, divergence. Oh, if you don't narrow it down to a specific edge that you have in the market, the market might take advantage of you instead of you finding the advantage inside the market. So find an edge, figure out what works for you and what actually works in the market as well, not just what works for you, but what works inside the market as well, and take advantage when it happens. When those setups happen, take advantage. And it's not like it's a 100%, Nothing in trading is a 100% thing, but something that gives you an edge, like a 5-to-1 setup. If you win 30% of the time, that's an 8% 8% profit after 10 trades. That's an edge right there in the market. As long as you're doing it consistently, that's an edge. Yeah, that's pretty much it. That's all I have today. I'd love to take some questions. If anyone has any questions, to drop them in the chat. You know, risk management isn't like tough, but it's harder to actually do than it is to like teach it or to talk about it, because of emotions. And so one other thing that I would say is, while people are writing questions in the chat, if y'all have any, one other thing that I'll say is, if you can figure out a way to take out the human emotion in trading, you'll more than likely get better regardless. So that means, if you can figure out a way to have everything systematically in place, rules on rules for your trading, then it's going to help you not think so much. The market is set up to make us overthink, make us feel greedy, and make us have fear of losing our money. And it's either fear or greed. And if you can figure out how to get both of those to flatline, you're going to become a much better trader, straight up, regardless. Once you get those to flatline, your risk will then start to flatline as well. So if you are having trouble with seeing a setup and saying, oh, this is going to be so perfect, I'm putting 10% on this because if I win, I'm going to win $100. You know, if that's you, then you're greedy. Straight up, you're greedy. If you get into the trade and you get up 10 pips and you're up $50 or whatever, and you get out, you're scared, right? You're scared because you thought you were going to make $100, right? You thought you were going to make $200, but you got out early. Why? Because you over leveraged. You were scared that it was going to go against you. So you got out early. Now, let me go to this question real quick. Okay, yeah, let me pause the recording now, and I appreciate everyone who got on. Let me stop the recording.